You're like, let's be clear on what this is.
Mhm.
Well, I don't want to distract us because I am a distraction. And you will appreciate this as an investor in our fund as well. I am on my way to another investor meeting, but I did want to just come on and thank you so much for being here. And I know you and Ryan have a great rapport. And welcome to all of the founders who are on. You guys are in for a treat. Just as Kyle mentioned, he lived in Beijing for a while. He has a worldly experience, so much knowledge. I am honored to say that him and his family office are also investing in our fund. So he is truly part of our Brain Trust community and family. So Kyle, thank you so much. Make sure you ask him lots of questions. He's ready for this.
Yes, please do. Thanks, Kendra, for the kind words. That was great. That was great. I'll turn it over to Ryan in case there's any kind of admin we need to address before things get kicked off.
No, I think we're all good. As always, Kendra, thanks so much for setting things up. Really great introduction. I will add on it just because Kyle's super cool. He's a very experienced consultant, strategist, and the current principal of K Insights. I had a great conversation with Kyle a couple weeks back. He's a real whiz when it comes to research, analytics, and investment. So he's going to be a really great resource for you all. I will turn it over to Kyle, right? I can't tell your story any better than you can. So please just give us a quick rundown, all the amazing stuff you've been able to do, and then we can kick things off from there, if that's okay.
Sure. So I hope everyone's comfortable. My name's Kyle. I am from the Bahamas, so big up Caribbean, big up any island people that are up in the mix. Moved to New York for college, went to Vassar College for undergrad, studied history and Chinese. I've done everything from diplomacy to equity research to oil and gas, hospitality, private equity. We'll kind of touch on that a little bit. And it's informed kind of the way that I look at the world, the way that I connect with people. When I go local, I go real local. And I think especially in the work that you're doing and the communities that you're trying to reach, the trick that I found is that you're not going to find a lot of market research as tightly scoped to the demographics that you're looking for. And so while a lot of the market research and data out there is very high level at a sector kind of level, a lot of it requires, as you all well know, like rolling up your sleeves, asking folks questions in parking lots and strip malls, in all kinds of other places, so that you can get a sense of what the people who are going to be using your products or ultimately interested in your products really care about. So I'm going to go through a couple techniques that I've found, some things that you may know already, some things that might kind of be interesting that you might not have quite a fix on. And really the goal today is to show kind of how to use the power of data, collecting that data, putting it in the right format, identifying the different variables that are important to you, and then creating an objective, repeatable process so that whatever you're doing, whether it's next year, whether it's 5 years, the process and the pathways are going to be the same. It keeps it clear. It gives your investors some kind of predictability, some transparency into how you think and why you think the way that you do, and then gives them the confidence to commit more capital or stay along this journey with you. So Ryan, did I cover everything all right there?
No, that's perfect. Great insight. And for context, everyone, data is so critical, as you all know, for a variety of different reasons. But as it pertains to crafting a compelling story for investors, as it pertains to understanding opportunities for potential revenue streams for your business, identifying the right data, knowing where to find it, how to use it is absolutely critical in terms of helping your business level up. So that said, Kyle, the stage is yours, man. Please continue. This is really good.
And Ryan, can I just add, because I love how you framed it, and Kyle, for all of the founders, I love how Kyle was saying, you're at the front lines of talking to your customers and being able to get that. And I've talked to so many founders where they're like, I started at a street fair. I was, at a festival. And we have founders who have really grown their businesses from being at festivals and being able to talk to their customers every single day. And so Kyle, I think, for founders, drop in the chat how you are uncovering your customer data now, if it is, to Kyle's point, street fair, grassroots, if you're using any tools. I know we have a partnership with Spate that everybody should have a login for, but maybe drop in the chat so Kyle can kind of see how that reinforces his first point. And Ryan, I will go back on mute now.
All good, all good. But I couldn't agree more with that, Kendra. Thanks so much for sharing. And before we turn it back to Kyle, I will quickly just say, and I don't want to put Pamela on blast here. We had a great conversation when we were back in Tulsa, and she had mentioned something. She said there's a difference between working in your business and working on your business. And as it relates to data and how to use it, it's so important to think through how you can recognize opportunity and know when to potentially pivot from the current day-to-day happenings of your business. So data is really best to inform how you should move as a company and where you need to go in terms of direction. So Kyle, again, back to you.
Awesome, man. All right, everyone strap in. Please keep your arms and legs inside the vehicle at all times. All right, so I'm just going to put this in full screen mode. Well, again, everyone, thanks for being here. And really, like we said, this is leveraging data to chart your next chapter. Quick rundown of what we're going to do today. I like to have fun with my presentation. So for the Harry Potter fans out there, fantastic data and where to find it. Then we're going to move into using that data to guide strategic decisions. Once you've got that, how do we think about using that data to develop those objective, repeatable decision-making processes, and then how you leverage those insights. Then, of course, we'll leave time for questions. Quick overview of who I am. So I've done some consumer packaged goods, private equity due diligence, excuse me, in South Africa. So I've worked with an all-natural women's hair care company. I've also worked with a South African jerky company. So it's called Biltong, if you know about that. And very much I was in gas station parking lots, in strip malls, going around different businesses, going, "Good morning, sir or madam. My name is Kyle. I want to get some intelligence about how you buy your biltong, how you eat your biltong, all of these things," and build a data set literally on a clipboard with a pencil and talking with folks. In a little bit more of an esoteric way, I have done some market sizing for the US industrial hemp market. So this is back in 2018, back when hemp was really kind of in a gray legal area. It still kind of is. But I was working with a lab trying to figure out, well, what's the overall market opportunity here and how do we take advantage of it? And then third, for fun, I am a rower. So really enjoy that sport, learned at Vassar. I've gone all over the world with it. I've rowed in 6 different countries. And I founded the largest rowing club in the Caribbean, which is kind of cool to say. So if anyone from Vassar or Duke is around, big ups. And then for just kind of rounding out my skill set, I've done some certificates at Oxford University and Columbia. So the meat, I think these are 2 really important quotes that have guided the way that I use data and the way that I work. My very first boss back in 2011 told me, "In God we trust, all others must bring data." And another quote by the same guy, W. Edwards Deming, "Without data, you're just another person with an opinion." You may have been talking with your team or even starting up, before you even started your company and said, "Hey, I think we really need a product that does X." Like, cool. All right. Someone else at the table might disagree. And so what is that kind of, what's that tiebreaker that drives the decision your way or the other person's way? It's data. And so Ryan has a copy of this deck. He can circulate it around. But in God we trust, all others must bring data. I probably use that 4 or 5 times a day, just to kind of like drive home how important that is. So we use data in everyday life, sometimes without realizing it. So big up my girl Tunde on Peloton. Just all of these numbers that are coming at you in terms of, where you are relative to other folks. This any Peloton heads out here? Yeah, it's awesome. So it's like, figuring out, what is that product of your cadence versus your resistance, which then leads to your output, where you sit on the leaderboard relative to others. And it's always changing. I know nothing about baseball, but people talk about it. I'm from the Bahamas. I'm bad at this stuff. Stuff on your iPhone, like how many steps did you take today? stock prices on Yahoo Finance. Like, this is all stuff that we look at, and it's all useful data. And I think it's become so commonplace and so integral to life that a lot of times it just kind of sits in the background and we use it without realizing it. So here are some of my favorite data sources. So I've divided these up in institutional, market research, and build your own. So the institutional stuff, everything from government reports from various provincial or state governments or agencies, CIA World Factbook, Pew, Congressional Research Center, any law review, anything that comes out of kind of a structured organization that produces information not for profit. Market research, this gets a little trickier. You'll have to pay for it sometimes, or one of the fun things that I've done is if you are in the market for an MBA intern or an undergrad intern, a lot of times they have access to these databases through their libraries. So that's something that you might want to think about, of having this program so that you can tap into those resources, because a market line data report sometimes can cost up to $5,000. And if you have an intern who has access to that through their library, you can get that for free. The third piece is building your own. So this is not me, but going around door to door, I saw some folks who had some podcast data. Oh, what's up, Cheryl? That's awesome. Just kind of going through of, where people are getting their data. Qualtrics is great. Google Forms is great. I really like the functionality of Google Forms and the Excel output that you can then transform into charts and things like that. And we'll get into how to use charts to communicate that data a little bit later on. So you got your data, big up my Finding Nemo fans out there. So there are two ways here to develop an objective, repeatable decision-making process. And this kind of sets, what are we looking at? How do we look at it? How do we size the opportunity here? And so you've probably heard of these. It's bottom up and top down. Effectively, you should get approximately the same kind of market size, but you're just looking at it from different angles. So on the bottom up side, you're starting from, it's like, well, I want to get into the coffee space. Well, I know that I buy 2 cups of coffee a day at $5 a cup. Okay, so based on my consumption patterns, how then do I use that to extrapolate up to the broader population to get a sense of what the total coffee consumption of a target population looks like? The other piece is, it's like, well, I know that there are however many dollars or however many people in a certain population. How then do I kind of narrow that down, divide to get to an approximate scoping of what I think my market would be? So depending on what you're trying to achieve and how, both of these can be useful. Sometimes it's just one, and kind of I'll walk you through this way here. So seeing as we're in the CPG space, and I've done some bit on men's healthcare, skincare in South Africa, let's try this. So we've got our per unit metrics, which is an average of $10 per bottle of men's aftershave. Here's our target use metrics. So 2 bottles a year, which is $20 of expenditure. So then I'm going to scope that to, well, what's the shaving population? It's like, well, old people probably don't shave that much. Kids don't shave at all. They're probably hit that around, 16 to 18. So let's kind of scope that at 60% of the male population is of shaving age. So 160 million times 60 gets you 96 million. 96 million times $20 is going to give you this possible 1.92 billion total possible addressable market. And then from there, you can scope that, well, that the various demographics within that X% are going to care about, kind of non-paraben, non-toxic. Okay, so I'm going to go with that. If there's ethnic scopes that you want to apply on that, the African-American population, for example, being 15%, you would just multiply this number by 15%. So there's a ton of different ways to do it, but you've gotten roughly what this market looks like. In another aspect, we've taken kind of the total annual expenditure on shaving care. And so this is face, body, legs, other, $4 billion. Men are responsible for 60% of shaving care. So sorry, 66%. And so you got 4 billion times 66%. You're then taking that 66%, multiplying that by 70% of men who actually will end up using the aftershave. And so then you come up with 1.85 million. So if you compare that to our 1.92 million versus our 1.85 billion, sorry, they're not that far off. You're only about $70 million off, which in the grand scheme of things is not terrible. So you've kind of gotten the scope of, on the low end, it's this, on the high end, it's that. And then now what do we do about it? You know, let's think about it. We know kind of some of the big players, your Unilevers, just kind of to name an example, is a huge player. So we don't know if the market is fragmented or consolidated. You know, if there are 3 big players who control 80% of the market, it's probably not the easiest place to get into. Let's think about consumption pattern. Are men loyal to leading brands? You know, I can tell you right now, I'm looking for the cheapest and the closest. So I'm not loyal. And then what are some of the other kind of key considerations that men use when purchasing aftershave? So this gets you an idea of how both models of top down and bottom up can help to inform what that total market population looks like, so that when you say, well, I think we should get into the aftershave market, you can use this information to drive those decisions and those discussions going forward. So I'll give you some real world examples here. So top-down market sizing, I had to figure out what the US industrial hemp sector looked like. And subject to that, you know, what are the real drivers there? So there's, you know, if anyone knows anything about hemp, it's a fascinating space. You've got seeds, you've got sheaves and strands, and then you've got hemp seed oil. And so here, I made a calculation basically showing that seeds are the fastest growing sector. Here is a comparison in the EU market, because hemp is legal there, of hemp seeds being classified as other nuts. And so if I know what the other nuts in the EU look like, I can then extrapolate that and say, here's what the other nut market looks like in the US. If I know that hemp seeds make up 10% of the other nut market in Europe, they probably make up about 10% of the other nut market in the US. So it's probably comparable. So I ended up with roughly 197.2 million in terms of an overall hemp seed market. That was back in 2018. It's probably grown since then. But kind of here's how you kind of rationalize that. Another project that I did was South African skincare. So there was a brand called Michael Mikiala Men. And so I was thinking, well, you know, you've got this skincare company that's really targeted at non-white men. So in South Africa, you've got blacks, coloreds who are mixed. You've got Indian, you've got Asian, and you've got white. And so I know that the Asian and white population are not going to be using this. So I'm going to scope it to the black and colored population. So based on that, here's how each much is going to go. I know that I need to figure out what my potential market share was going to be. Based on that, you know, what's my potential consumer base? Some of this data was out of whack, so just kind of left TBUs and question marks here. But by aggregating both this, you know, what's my total percent of the population of you know, Black Africans? What's the total percent of men? What's the total percent that's likely to consume across these various age ranges? And then once I put that all together across the blacks and the colored populations, here's what I can possibly get. So once I've gotten that sense of population, you know, how does that shape out across the product lines to what people are using? And so here, you basically got what's called a 100% stacked bar. And so I know in the face wash section, Clean and Clear, Dove, Vaseline, and Nivea, those are kind of my big players here. In the face scrub section, Michael Mikiala Men is doing a great business, but it's the smallest of these two sectors. 11 people are using those versus 24 people using face wash, 30 people using moisturizer. And so kind of looking at that, it's like, well, I've got a leader in the face scrub product area, but it's the smallest of the product areas that I'm looking at. So maybe that doesn't necessarily make the most sense for me to expand into right now. Any questions on that so far? Cool. And so now, sorry, go on.
I was just going to say, if any of you all have questions, please feel free to add them in the chat or, ping me, and then we'll, give the mic and the floor to you. Thanks.
Cool. Thanks, Ryan. So now that we've got all of these insights of, what our population size is, likelihood to use, competitors, things like that, how do we use those insights and do things with them? And so I really like this quote here. Data is like garbage. You better know what you're going to do with it before you go and collect it. And so some of you may have heard this phrase, begin with the end in mind. What's the goal that you're trying to determine here? And so I think that's really important to get a sense of, you have a hypothesis. So, hey, I think that there's room in the market for an awesome face scrub. Cool. I'm trying to determine whether the market is ready for that face scrub, what some of the differentiating factors are, what are those prices that people are going to pay for it, and based on that, how much money can I possibly make in order to justify this as an investment, either on my own team or to my external investors. And so we think about, how to use data here. So internally, we've got all kinds of things that you probably look at already, in terms of, what are your operational and financial metrics? What are your profit margins? What are your SKUs?
No, I'm checking these people out.
Excuse me, can you
Okay, throw.
Kyle, go ahead? Sorry.
Sure. Yeah, thanks, Ryan. So, you've got uses for this data internally, which are different to your uses externally. Really, the internal piece, you're just monitoring and make sure that your internal organization is healthy, that you're actually making money on the products that are really driving your revenues and your profits. And then that basically determines, well, hey, do I want to raise capital? Do I need to raise capital right now? Or do I have enough cash flow based on my products that are already in existence to get me through another 2 quarters, another year, rather than either taking on debt or raising equity and giving up more control. On the external side, Kendra and Ryan, you guys could speak to this, data is useful to communicate that value to your existing or prospective investors. They want to know, like, hey, how are we doing this quarter? You can't just come back and say, good. You got to say, hey, we grew this much in sales month over month. We're doing it this much more year over year. You're justifying to the investors why you're a good investment and why they should stay with you and not pull their capital. It shows disciplined decision making. You want to make sure that you're adhering to regulatory practices. You want to make sure that your customers, you're actually putting products out in the market that customers are going to continue buying and tell their friends about. And also think about, well, would they spend more money? Are they spending less money? What are we looking at here? When they come to my store, has average order value gone up 20% year over year, or has that gone down? And if that's gone down, why? Does that come down to the user experience on the website? Is that coming down to consumer satisfaction? All of these different things. So kind of data begets data. And the more that you have around that, the more informed conversations you can have both with your consumers as well as with your investors and management. So you got all this data sitting around. I saw someone in the chat saying, like, hey, I've been collecting all this data. What do I do with it? And so this is a great time to bring in Say It With Charts. I am an absolute nerd. This book is ancient. People have been using it since laptops looked like this, and probably even like fax machines, and where people would have to like hand draw slides. But there's something that is just timeless about being able to communicate succinctly in a visual way. I think this may be free online, but if not, I'm going to make a note to send my copy in PDF over to Ryan to share with you.
Thank you.
Yeah, man. And then secondly, not that you need more chart things, but hey, we could all use a couple more charts. I really like mechographics. So Mecha Graphics is an Excel plugin. I think the first 3 or 6 months are free, and then you have to pay for a subscription. But you're able to put together insights like this 100% stack bar that we saw with Michael Michiala Men, where you're able to see, right, like what's the overall market of those different market segments? What are the leaders and laggards in those spaces? And then aside from that, what's the growth rate? So compound annual growth rate is another kind of data segment of, is my market growing or shrinking? What is that going to look like in 5-10 years? Things like that. And so these are all really great sources to both track your internal metrics. I don't know if you have dashboards that you talk about with your team on a monthly basis. I don't know if you have quarterly reports that you send out to your investors, but this is the language that they speak. And the more that you can speak their language, the better they are going to work with you, the more they're going to trust you, and the more comfortable they're going to be with their capital in your hands. Any questions on charts so far?
I think we have actually one here in the chat. What would you say is the compound annual growth rate that is deemed attractive for the CPG space? That's a very good question. Do you have any thoughts on that? Should we pin it?
And I would refer you to my friend MarketLine. I think there's as the great rapper said, there's levels to this. So there's segments to this. And so, you got to figure out, am I in the lotion business? Am I in the perfume business? Am I in the X business? Okay. Based on where I am in the X business, what is my target demographic here? So for example, let's call it sensitive skin lotion. I'm not quite sure what that space looks like. Let's do a little exercise right now. So for example, one could argue, it's like, well, anecdotally, I'm realizing, or I'm hearing that more people have allergies or irritants out in the market. So my sense, as someone who needs a sensitive skin lotion, I'm hearing that more people are buying sensitive skin lotion. Okay, that's interesting. Let me look into that. Is there a disaggregation between sensitive skin lotion for men versus women? Okay, there's none. Great. So then I can say, based on the overall market for lotion, which is probably, again, just picking out numbers here, 100 million. Based on the people that I've heard, last year I heard, 20 people a month talking about that. The month after I heard, 30 people a month talking about that. So 10 people more the following month than I did the original month. So a 33% growth rate in anecdotal kind of instances, which would lead me to believe it's like, well, people have more money, which means they're going to more doctors, which means they're going to more dermatologists, which means they're getting prescribed more specific care options for them. So based on that, I can assume that $100 million lotion market, with call it 30% being sensitive skin lotion, that could be growing at X CAGR. And so you kind of jump into those insights. So I wouldn't be able to say off the jump what that attractive CAGR would be. But I would take that CAGR for your segment, compare it to, what's the CAGR for lotion versus what's the CAGR for sunblock? What's the CAGR for, what's another comparable, body scrub or body wash? And then compare those. I like to have kind of 3 to 5 samples to compare against, so that you have a sense of, what's my winner, what's my mid, what's my low case. And then from there, you can figure out, well, lotion doesn't really seem to be the best option right now. Maybe I should think about sunblock. So I didn't exactly answer your question, but did that at least help kind of contextualize why I can't give an answer?
Yeah, thank you.
Awesome. Cool. So thinking about all of these great opportunities to communicate with data, let's think about now decision-making. So we've got something called frameworks. Have people here heard of frameworks or using frameworks to, awesome. Cool. Seeing a lot of nodding heads. So a framework basically just identifies the most relevant and impactful data for you, right? So kind of using that lotion example, let's think, am I going to get, should I get into the lotion or the sunblock market? Let me think sunblock, because people are going to the beach, they're living their best lives down in Cancun, they're going to need some sunblock. So I'm thinking about this, and that CAGR here, is my market growing or shrinking, and by how much relative to other products in there? Is the regulatory environment favorable or not? As a sunblock provider, do I need to get FDA approval in order to put my sunblock on the market to achieve a certain SPF rating? What does that look like? How many regulatory bodies and approval bodies are involved in this that are going to be speed bumps for me getting my product to market? What's consumer sentiment toward the segment or subsegment? So, you've got sunblock. Is it organic? Is it non-organic? Is it chemical? Is it non-chemical? Kind of think about what that looks like as tightly as you possibly can, so that you can compare those to as many different competitive and comparable options as you possibly can. In terms of team and advisors, this is what Ryan and Kendra and Lisa are looking at. How's the team positioned to win? What have you achieved? What's your experience? Who's guiding it? What are your technical or commercial advisors looking like? How does leadership compare to other firms? If you've got someone in the CPG space who has been a CEO leading a team, who's pitching a company, versus someone who was just kind of a junior product manager for 5 years, there's going to be a tendency to go with the one with more experience, the higher title, the more visibility and experience. Operations, what are, and this kind of goes to you of, how much does it cost to produce a tube of sunscreen? How much can I sell it for? How much can I make when it comes out the back end? What are my margins relative to peers? If Sunbum's coming out at 10% margin, you're like, oh, I know that, in a comparable market, that should be 50%. Well, this is going to be tough. And then, more and more people are thinking about environmental, social, and governance considerations, your diversity, equity, and inclusion, your kind of corporate social responsibility track record. For every, I think Warby Parker does a really good job of this, of for every pair of glasses sold, we donate a pair. I believe Bombas donates a pair of socks for every, X pair that you buy. So thinking about, what does that look like? How is that going to differentiate you as a company that's going to get the investors' attention? Financially, are you profitable? Are you looking to raise more money? And again, kind of getting to our point of debt versus equity, if you're looking to raise more money by debt, you're going to have to pay that off at some point. So do you have enough cash flow from your existing products and the expected cash flow incrementally to be able to service that debt as well as pay it down? If you're raising equity, how much of your company are you willing to give up? And therefore, how much control of your company are you willing to give up in order to achieve that next step change that you think you need to grow? And then using data, how are you going to justify that step change and kind of work out those probabilities that I've got a 90% of achieving this, therefore you should invest in me in order to achieve this level of return. Cash burn, we saw this a lot with tech firms over the last 5 years of, hey, I've got a bunch of cash, but am I devoting that to research and development, or am I devoting that to team offsites and Don Julio? I don't know. That's on them. And then exit methodologies, right? So as founders and as entrepreneurs, this is something you might want to think about. Like when Brain Trust comes in, are you trying to sell to J&J or Unilever, or are you trying to get to a point where you're going to IPO on the public markets? And both of those have their own set of risks, right? So for example, in this current capital market environment, nobody really wants to IPO, because if you think that you can sell if you open your stock at $50, if you open on a bad day, you might close at 35. Right. But if you get acquired by a legacy player, they've been doing this a much longer time, and they might think, well, actually, I think your stock is only worth 30 per share. And so you got to think about that of like, am I trying to cash out, Am I trying to kind of stay involved? All these other things here. What are your timelines? How are you going to get your money back? What kind of investment period am I thinking about? Am I kind of comfortable with 6 months and expecting a pop? Or am I good if I never see this money for the next 5 years? And these are, really important questions to have, because your investors are going to say, well, you don't want them knocking on your door every quarter. It's like, so what's the deal? Are we going to float this? Like, what's going on? Where am I going to get my liquidity from? You don't want that. You want a partner who's going to come in with capital and say, you know what, this is yours. You know what to do with it best. I'm comfortable with this. And then key risks and considerations. A lot of bigger companies have to worry about geopolitical risk of, like, is my factory in El Salvador, for example? Is there some kind of nationalization risk if I'm somewhere in a place that has poor governance? Am I only selling to 3 customers right now? That customer risk. And then what's my regulatory risk? Like, I don't know how or if those things might change based on regulations. And if those regulations change, how will that affect my ability to move my product to the market? So that's a really kind of exhaustive way to think about this. And you can adapt these kind of critical areas here with these sub questions that you might want to ask when you're thinking about what's your next product, what's your next market, who is the next, or what is the next marketplace through which you're going to be selling. I love this. This is because, again, I'm a nerd and I love stuff like this. So thinking about what your next steps are going to be. So has anyone seen this before? Anyone come across this? So this was developed by the Boston Consulting Group. And it's called a 2x2 because it's 2 squares by 2 squares. And effectively what it does is you want your initiatives to kind of end up in this green square here. So this is high ease of execution or implementation with a high probability of growth or a high value payoff. If your initiatives end up here, you are in a very good place. If your initiatives end up down here, you probably shouldn't pursue them. If they're in either of these gray squares, you'll be fine, but you really kind of want to isolate for as many things in this green square as possible. So how do we get things there? You want to weight and isolate for factors that you consider important. So this is kind of using a similar framework. Let's look at market size. Let's look at market growth. What are my macro trends? Is this a competitive space or not? Are my EBITDA margins on a particular product set going to be greater than 25% or less than 10%? And based on those scores that you give, these kind of ultimate scores down here, based on the weightings over here that you assign to each of those factors, each of those things will then get a score, right? So you can then isolate for, well, I know that this is going to come out with a high set of values. So things like, am I going to make a lot of money? Are there going to be a great number of consumers? How much are they willing to pay per unit? So you kind of got, let's call your, really, this should have been Y and X, so I apologize. But variable Y here, let's call that your dollar value, and variable Y being your kind of market consideration. So your variable here, you want to think about, of all of these things, let's call it 10 points. If 10 is up here and 10 is over here, if you're getting something that knocks 10 by 10, you're going to have an objective or an initiative that ends up over here. If you're getting a 10 by 1, that's going to end up over here. And then if you're getting a 1 by 1, you're going to be down here. And so by isolating for the things that matter, either in your product line, for markets that you want to get into, you can figure out what matters to you based on your particular situation. You can then figure out, well, I really want to pursue 1 and 2. 3, sure, let's kind of get to that once we've taken care of 1 and 2. 4, not so much. 5 and 6, don't want to consider them at all. And so you kind of, the thinking through kind of like what this looks like is brainstorm with your team on what each of those axes look like. What are the 3 or 4 key considerations or variables on each axis that you want to isolate for. What are the weights that you want to assign to each of those variables? And then from there, assigning scores. And so then then again, like I said, you want, if it's out of 10, you get 10 by 10, good. If it's 8 by 9, great. So that's kind of what we're thinking. It's a little complex. So I'll kind of stop there and ask if anyone has any questions.
Kyle, I'm just gonna throw this up here.
Yeah.
Thank you. I wasn't familiar with the 2x2 chart here, so this is really great learnings for me as well. Is there any aspect of this that's somewhat arbitrary? Like, at what line does it transition from, being very accurate to being a bit subjective, right? Does that make sense? Like, just if I were to display a 2x2 chart to an investor, why should they care? I think that's my question.
Yeah, I think that's a fantastic question. And in all honesty, I think it's all a little arbitrary, because again, it's so product specific. So for example, like if you let's go back to your background, right? I don't know, Ryan, if you know, but Ryan is legend in the HVAC space. And so you think, I want to expand into Texas, for argument's sake. I know that there's going to be what's my market size in Texas, right? How many, are those going to be, do I want to look for, more people buying kind of a certain size or megawattage of HVAC unit, or is that kind of like the residential personal side? In terms of my barriers to entry, are there going to be, 5 companies that service things stationwide, or are there 15? And so based on that, it's cool. If there's no real barrier to entry there, cool, then that's a high score for me because I know I can get in, I can aggregate market share relatively quickly because people aren't loyal. Thinking about suppliers and customers, okay, cool, I've got customers, but how easy is it for me to get parts that I might need that I don't want to necessarily keep on hand in inventory? If it's going to be a 2-week wait time and these people in the middle of Texan summer want their parts later that afternoon and tomorrow, that's going to be a 1. And so in some ways, it's what matters for you. And based on what matters for you, you then communicate to your investors because you are not me. I might have a whole different set of considerations and circumstances, but if you can prove, here's how we've thought about this, here's why this matters to our particular operation, and here's how we're going to use this to win. We might use the same 2x2 setup, but my variables and outcomes will be completely different. Did that answer the question?
That's incredibly helpful. And even just to build on that, I can't help but always think when I, look at stuff like this, how integral sales is to everything that we do. Even Brain Trust is a fund. We're currently fundraising. Investors are our customers. That's who we're selling to effectively, as well as founders, right? So I think in that example, it's important to identify your customer that's going to be purchasing your product and identify the investor customer that can relate to and have the industry understanding to value this 2x2. Like if I'm dealing with the HVAC or, trade-centered investor or investment fund, they're going to understand the nuances of my industry. So reflecting this 2x2 and showcasing the opportunity and the implementation probability would resonate much higher than if I took it to a general tech investor that has no context or understanding of my industry. So that's the long-winded answer of saying, yes, it makes sense. And I think it's important to understand who your customer is on the investor side and the regular customer side to optimize data and sell more effectively.
Cool. Glad to hear it. So I'm gonna stick here with parting words from my boy Benjamin Graham. You may have heard of him. He wrote a book called The Intelligent Investor, basically about how to manage markets and manage investing in those markets. And remember, you are neither right nor wrong because the crowd disagrees with you. You are right because your data and your reasoning are right. And that gets to the point that we just discussed. It's this is the data that matters for me. Here's how I'm going to act on it. Here's how we're going to go. So we're going to get into questions. I see that Anne has a question that I'll jump into, and then Ryan, I'll turn it back over to you for kind of managing that forum if that works. So Anne's question, foundation of research is good quality data, but it turns out data acquisition is often the most expensive part of doing good research. Many of us have target customers who are understudies. Any comments on how to cost effectively collect data from Black women? That is a tricky one because I think I'd be really interested to get a better understanding these days of whether folks like MarketLine, Euromonitor, et cetera, are recognizing the purchasing power of the Black community. And that's Black community being African Americans, Africans in Europe, African diaspora, Caribbean, because more and more research shows that there is a greater cultural affinity, ethnic affinity, things like that. And so really the Black consumer is becoming kind of its own powerhouse of a consumer base. So in terms of cost effectively collecting data from Black women, I think I'll kind of give you an example of what I've done in the Bahamas, which is, where do Black women tend to go, right? Is that, kind of 20 years ago, that would have been church. So now is it the salon? Is it Rotary? Is it, what are these kind of community groups? Where do they go? What frequency do they gather? And who are the leaders or organizers of those groups? Because I think there's also been a great distrust of giving up data because you don't know how that data is going to be used, giving it to people that you don't know. And so by getting into those community groups and working with those community leaders and encouraging them to fill out a survey for a Starbucks gift, like a $5 Starbucks gift card across 100 women, 100 is a pretty significant sample size. And so $500 is definitely less than $3,500 that you would pay for a MarketLine report. So I think it's going from the top, figuring out where Black women or those target demographics would gather. Number two, figuring out who is the coordinating person or factor around those groups, getting in touch with them, building rapport, building trust, and then talking with them about the best ways to disseminate your survey material to gather that data. And did that make sense?
Yep.
Awesome.
All right. Does anyone else have any other questions for Kyle? If so, feel free to throw them in the chat or even come off of mute.
I see we've got one from Cheryl. In your opinion, how is data underutilized when making decisions? I think a lot of times data is either underutilized or ignored completely, especially when it relates to investing. And I say this in the Black community. I think so many times we want to support our people. And this is kind of where the kind of accredited investor status comes in, where people have more than, where they earn more than $250,000 a year to become an accredited investor, which means they can allocate a certain percentage of their income to a venture without necessarily sacrificing their own financial stability. Because if that venture goes wrong, they're still going to have cash flow. So I think there are people that come up to us that want to start businesses like, hey man, I got this great idea. What do you think? It's like, I think it's great. And then they're like, well, can you spot me? It's like, well, in another world, if I was worth a ton of money, I'd say yes, unequivocally. But in a case like this, it's like, you kind of have to let the data speak for itself. You got to let that person bring the data. In God we trust, everyone else brings data. It's like, cool. So what's your idea? What do you think the market size is? How much do you think you can sell this? How much do you think it's going to grow? When can I get my money back? Who are you going to be banking with? Because I don't want my cash just sitting in a shoebox under somebody's mattress. And then you skip town. Are you incorporated? Are you an LLC? Are you a C Corp? Are you a B Corp? These are all these questions that are important data points, kind of going back to our framework here of, of, like, what do their operations look like? What's their governance? Are there other people on the board, or is it just your friend? And I've seen this happen over and over where I was looking at a beverage company, and it was my friend's friend who ran this company. And I said, this guy has his sales increasing 12 and a half times year over year. I just don't think that's possible. It's like, yeah, well, he's got these conversations, like he's got conversations, but he doesn't have letters of intent. He doesn't have purchasing contracts. He doesn't have any of these things. It's like, well, can we just, it's like, no, we can't. Like, give me stuff in writing, give me numbers. And so I think in that regard, you can't let the emotion dictate the decision-making when the decision-making should be dictated by data. Because again, if none of you knew Ryan, none of you knew Kendra, you're going up to somebody and say, hey, I want you to invest in me. It's like, well, why should I invest in you? And you slip them all of your numbers and they say, cool, I can vibe with this, versus I'm a cool person. Did that answer the question, Cheryl? Cool.
Awesome. Any other questions for Kyle? Well, if you don't mind, it's a very interesting presentation. I'll throw just one in the ring, because I was curious when you were going through the bottom up versus the top down approach when you're assessing your market size. Is one better than the other? Does it not matter? Do you have any thoughts on that?
Yeah, I think it depends on what you're trying to do. So, for example, I'll use the biltong example. So, let's go bottom up here. I'm trying to get a sense of the South African beef jerky biltong market. I want to know the average, if I can go across 20, 50 people and say the average consumer spends $20 on biltong every month. Cool. So that average person times the population of South Africa, which is, that's a big question. I think probably 30 million, maybe. So anyway, per capita consumption times the total population, then divided by, or I would subtract, multiplied by the percentage of the population that are not vegetarians. So then let's call it monthly biltong consumption times total population times population that are not vegetarian, so call it maybe 60%. That would then give me the total possible biltong size. Versus somewhere a sector that's got readily accessible information. So for example, like in the US, I know that the US toothpaste market is 8 billion, and you've got that number and you can kind of be anchored by that number. It's typically more easily accessible data. It's a little bit fuzzier, but it gives you a known base to work from. So I think the top down is more useful for a known base. I think the bottom up, especially in spaces that we work, is much more useful because there is no known base. And you can then extrapolate your known base to a number of other communities and population centers across a country, a region, things like that. Was that helpful?
Yeah, very helpful.
Cool. I see a question from Mona. You mentioned 100 data points being a significant market size. You're collecting data. At what point is data dependable to make deductions from? I think that is a really good question. So I guess it really all depends on where you are, the total size of that population, and then the sample size relative to that size. So And I guess also by extension, the speed at which you need to make that decision. So if you are in a town of 500 people, you're probably good with sampling 25 people, which is 5%, which is a significant portion of that population. If you are in a major metropolitan center like New York of 10 to 12 million people, you might want to do something that's a little bit more significant in the thousands. And sometimes if you look at like the Pew Research or Quinnipiac, the political polling, you'll see sometimes down in the corner, there's like, however many thousands of people called, or, X million polled, whatever that is. Because if you were to ask just 5 people based on where you are at any given day, let's call it in New York. If you ask 5 people in the financial district, there are pretty high chances that they're going to be roughly the same type of person. If you ask 5 people in Harlem the same question at any type of day, they are also likely to be the same type of person. So by asking a number, basically like if you're getting 10 people a day from 10 different regions at 10 different times of day, you are more likely to get a sample size that reflects the world and the people that are going to be walking into stores and looking at your products or visiting your page, downloading your app. That's going to be so much more representative and so much more useful to you because you're not just making a decision based on someone who might not represent your average target consumer. Does that make sense? And so I think there's definitely a point of overkill. But I always think that the more data, the better. I think the more survey people that you have, I think at some point, like after 100 or 200, you'll start to see some patterns. So as you see kind of like the dots on the graph, or if we go back here, you might start to see some clustering. And then kind of once you see some clustering that's maybe 10 or 15 dots worth, and then that 10 or 15 relative to the total sample size. So if it's 10 or 15 out of 50, you're like, oh, that's really interesting. Let's double that and see what happens. So then you go up to 100. And if that same clustering continues, then you say, oh, well, cool, we're onto something. And then you've got 30%, so 30 out of 100 that are in this cluster. But you may also find that by doubling that sample size, that clustering then ceases to exist, which is also extremely useful. And then thank goodness that you didn't make a decision based on the clustering here, because the clustering somewhere else may be much more representative of the consumer that you're trying to find. Is that helpful? Cool.
Awesome. Well, thank you so much, Kyle. This was a very, very valuable presentation. Everyone, this will be posted inside of the app, and I will also circulate the pitch deck so you all can refer to it as you see fit. Thank you all so much for joining us this afternoon, and we're looking forward to the next session later on this week. Take care. Bye.
Awesome. And feel free to reach out to me whenever.